Bless Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And today I want to talk about how long this bear market is going to be. As you can tell, the stock market is down, everything's crashing, the NASDAQ looks horrible, the S&P 500 looks horrible, and we're at levels that we haven't been at since the pre-pandemic. Like pre-pandemic levels around that 3, if you look at the SPY, the S&P 500 index, we're around that 390, 380 level, hovering around there. We've been dancing around that level, around 380, 390, a little 370s for the past couple months now. And we've been chilling in this bear market. Prices have been going up. Inflation has been looking terrible. And people are wondering, how long is this going to last? How long is this going to be? So today we're going to discuss how long it's going to be and what you can do to prepare for the times ahead. So before we get into it, make sure you spam the like button, make sure you hit the like button, of course, and sub down below for more content like this, because we're going to be talking a lot about stocks, finance on this channel. That's what we do. So without further ado, let's get into it. Starting off, you're probably wondering, what is a bear market? A bear market is simply when the stock market is down at least 20%. So if you take the high, the very tippy top, the highest point that the stock market has ever been, and then you bring it all the way down to where it is currently, it's over a 20% decline. And that is the definition of a bear market. With bear markets, there tend to be recessions, depressions, the deeper you go down. So if you go down 30%, you're in. If you go down 10%, you're correction territory. 20% is bear market. If you go down 30, you're in recession, and then deeper than that, you're in a depression. So right now, we are currently looking at a potential recession for 2023. If you look at the market indicators that say that look at recessions and say we're in a recession, we currently are in a recession, but people won't call it yet because they're trying to wait. They're trying to save face. Nobody wants to actually say we're in a recession. But looking at all the standard markers, the bear market, how we're in, how GDP has declined over the past 6 months, how the stock market is down over 20%. Looking at all these different indicators, inflation is super high right now. We are currently in a recession based on the numbers. So let's look at how long these things typically last and what we can look at as indicators to figure out, okay, what are we going to do? So first and foremost, a bear market tends to happen every 5 years. Usually when you look at the 2000s era, we haven't really had a lot of bear markets a lot in 2000. So if you look at 2000, we had a bear market. If you look at 2008, we had a bear market, which led to a recession. But other than that, we have not had a lot of bear markets. And that is not normal, because bear markets are more of the breathing pattern of the market. Markets move in waves. So you shoot up and then it'll come down a little bit. It shoots up, comes down a little bit. And that tends to happen, that coming down pattern tends to happen every 5 years. But since 2008, we really haven't had a bear market. We haven't had a serious decline in the stock market. It's just been consistently going up, 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 up. So right now, we're actually due for a pretty decent bear market, over 20% declines, and that's where we're at right now. On average, these bear markets tend to last about a year. So you can really expect a bear market to last you. If we're looking at right now, we can expect it to last to the end of 2023. On the shorter end, the shortest one was in 2020 during COVID. That lasted 33 days. The reason why that was so short is because we had a lot of Fed intervention. But the longest was in 2000, where it lasted about 2.5 years. It was 929 days, which is the longest we've ever had. But on average, we're going to get a 1-year bear market, and then we're going to have a 4-year bull market where stocks go up. So looking back at COVID, when we had that very short 33-day quote unquote bear market, it's even hard to call that a bear market because it was just so short. But if you look at how the market played out, how the Fed intervened and flooded the market with all this money to help with COVID, they flooded trillions of dollars into the market to boost prices, to boost the stock market, to make sure prices don't go down. That's why it was so short. But because of that, there are consequences for what they did. So currently we're looking at The numbers just came out. They said it's at 7.7 inflation numbers year over year. We have an 8% PPI number for year over year. So inflation is really high. And that's just because of the fact that the Fed printed all this money. They flooded the economy with all this extra money to help people during COVID. But there's consequences for that. And that means prices will go up due to the access of money, extra supply of money minus the decline of goods and services will cause an increase in prices. And that's exactly what's happening right now. So these steps they took kind of led to the inflation problem we have today. And what they're trying to do is increase interest rates up to lower the inflation, to get inflation back down so we're not experiencing these super high prices. But in response to this, we're going through a lot of economic decreases, economic declines, and people are contracting based on how interest rates are going up. So this recession is going to be based on how long and how much we can handle of interest rates going up. The Fed, Jerome Powell, said that they're willing to increase interest rates until they get inflation down. They want inflation down. Their target is 2%. Currently, we're at 7%, so they're nowhere near the target of 2%. But once they get interest rates up to a level that it can bring inflation down, what they're going to do, they say they're going to stop raising interest rates and focus on the economy. But their goal right now is to increase interest rates and keep increasing them and keeping them very high until the inflation goes down. The problem with this is as they increase interest rates, it's going to make the economy go down lower and lower and lower. So if we're looking at the average, on average, a recession, a bear market takes about a year to turn around. But looking at the signs of this current one, we want to focus more on what the Fed does. Are they increasing interest rates? Are they continuing to increase interest rates? Are they reducing their balance sheet, getting rid of all the money they printed back in 2020? Are they talking and saying, okay, now we want to focus on building back up the economy and not focusing on bringing inflation down? Those are going to be the telltale signs to say, okay, the recession is going to get ready to be over. Instead of focusing on inflation and bringing inflation down, the Fed is now going to focus on the economy and making the economy as strong as possible, because you can't do both at the same time. They're picking their battle and they're choosing to fight inflation and sacrificing the economy to fight inflation. So I say this fight takes about a year on average, just like the average of a bear market takes. I think this fight is honestly going to take us toward the end of 2023, because I don't think inflation is going to come down anytime soon. But once it does, that's when you know the fight for the recession to turn the economy around is going to start to happen. It may take longer. Maybe inflation doesn't come down for the next 2 years. That's definitely a possibility. And we'd be looking at new numbers and looking at the Fed and seeing how they move and how they operate with a very long-term inflation problem. And then we'll have a longer term recession problem. So this is all going to determine on how the markets move, how inflation moves, and how the Fed decides to move forward in these next coming months. But in the time being, we're here to make money. We're here to take advantage of the opportunity. Stocks are down 20%. Plus, that's a sale. Black Friday's coming up. You go out and get a sale on your TVs. You get a sale on your shoes. You get a sale on all these different things that you like. But right now, even during Black Friday, the market's on sale. The market's having a Black Friday sale. So we want to be taking advantage of a lot of the stocks that are on sale. We want to be dollar cost averaging in. We want to be looking at these plays and saying, okay, let's load up on cash, because these are great companies. Even though they're down 20, 30% right now, these are great, solid companies that I can see myself holding on to forever, for the next 10 years, for the next 20 years, because I just love these particular companies. One company I like, this is not financial advice, but Caterpillar. I think Caterpillar is doing a great job. They have a lot of cash on hand. They're setting up to get ready for a lot of infrastructure and construction that's going to be going on in the next 10, 15 years. I love what the CEO's talking about. They're doing a great job. And I really think that company is going to propel itself into the future after this bear market, after this recession takes place. But that's what we want to focus on. We want to start loading up on cash, saving money, getting conservative with our investments, not focused on names that are kind of growth stocks that are going to be 10x plays. We want to be focused on just simple first bait, just easy plays, you know, first bat type plays, nothing crazy, no home runs. Just try to get the first base, second base plays, nothing too crazy, and kind of lay low for this next year. Just plan for the 2024 and how that's going to play out. And then once 2024 hits, or once this recession turns around, start loading up, get these stocks, get these, start buying all these property and stuff like that. And you're going to be good for the next 10, 20 years. You're going to be straight. This is going to be a great opportunity to get deals on stuff. So if you're excited like me, let's get it. Let's get into this new market, because this bear market isn't going to last forever. But that's going to wrap it up. If you have any questions, let me know down in the comment section down below, and I'll be happy to answer all your questions that you may have about this particular bear market and how the Fed is going to be moving in this market. But that's going to wrap it up. It's me, your boy. Blessed Applesauce. Stay blessed. And we'll see you next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.